Good morning, David Coombe here with the AM Debrief this Tuesday the 13th of December, and a bit of a sell-off overnight. A couple of the ratings agencies came out, Fitch came out and said that the lack of a comprehensive fix to the debt crisis had put pressure on the debt ratings in the Eurozone area. That was followed up by Moody's, who also said the deal on Friday was insufficient to reduce the sovereign downgrade in the Euro region in the short to medium term. So that saw things off pretty substantially. In fact, we were down over 200 points on the Dow at one stage, but just towards close there, those falls were pared back, so that we ended up being down. The market is now closed about 15 minutes ago. Down 162 points. The Eurozone, in the case of the FTSE, down a similar amount, 1.83%. The DAX down more so, 3.36. So I guess we're seeing a bit of a reflection there of the British sort of pulling back from the Eurozone area as much as they're able to, and try and sort of firewall their exposure to all of this. But still getting dragged down pretty significantly. The Euro 50 down 3.12%. In the Asian area yesterday, in our neck of the woods, we had the Nikkei up 1.37%. The Hang Seng just down a smidgen from even, and Shanghai down 1.03. Now, we are hearing some of these stories coming through about the China growth situation. Not looking all that inspiring just at the moment. Let's have a look at the futures here for the local market. Okay, down 64 at the moment. Earlier when I looked at it, I recall seeing something like 70 or 80 to the downside, if I recall correctly. So that's a little bit better. Let's move on and have a look at the commodity space. We're seeing West Texas crude down $1.27 to $98.14. Now, there is talk that Europe will get itself sorted out with this, but it will take a while, and a recession is almost certainly a byproduct of these processes that are going on. So perhaps that's seen as an opportunity to be looking at shorting crude here. Don't forget, it has been up at this 100 level. There's very little on the horizon that we can see, at least, that is going to see it push any higher, or any reason for it to go any higher than about 100. So if anything, we're starting to get fairly bearish that, and that certainly seems to be where it's heading just at the moment. Looking at the rest of the soft commodities, looks like coffee was a fairly big faller, but cocoa up dramatically here. Not actually sure what's caused that. The the pound-denominated contract up 6.05, and the US dollar up 5.52. Cotton was a fairly big move to the downside, 3.62, and lumber 4.17. In terms of what was moving up, oats 1.57, and soy up 0.45. So a little bit of a mixed bag there in terms of ups and downs. Nothing really standing out that much there, apart from that cocoa. Okay, on to metals. Copper down 10.3 cents, or 2.70%. Gold at 16.68, quite a big move to the downside there, $48 it's shed, or 2.8%. And of course, silver always on a percentage move, seemingly moving bigger than gold, than its sister metal. Gold down 3.08%, or 99.3 cents. Okay, moving on to our currency pairs. Euro, looks like we've had some US dollar strength here. Just looking at the crosses here, so euro buying 1.3189 US dollars, the pound buying 1.5584, the US dollar buying 77.8818 yen, the Aussie nearly back at parity, 1.0078, US dollar Canadian at 1.0258, and the US dollar buying 0.9371 Swiss francs. Okay, let's have a look at the economic calendar now. Pretty much the only Tier 1 data we have out is CPI numbers for the UK, so if there's any hint there of inflation coming through, well, certainly the expectation was 4.8, so that's a fairly big print there. Year on year, pardon me, November to November, that's core CPI, expecting 3.3. So a big number there would be a bit of concern, and it would put pressure on the central bank there to want to start looking at raising interest rates at a very delicate time for the rest of the economy. So caught between a bit of a rock and a hard place there. Okay, we've also got some German economic sentiment numbers out, expecting negative 55.8. Doesn't sound like a very good print, but it's probably not surprising. Going into tomorrow, we've got retail sales out of the US, which will once again give us a bit of a feel for how things are tracking along there. Okay, move along and have a quick look at the Falcon Trader here. Must have been last Thursday now. I talked about the possibility of this area here being a level of upside resistance, and the makings of a bit of a wonky sort of trend line there, but certainly it looks like that will be holding for today at the very least, because we're clearly going to be coming off there. So it's for this reason I'm reluctant really to suggest going long anything much, and really I think if we are going to see any further moves to the downside, then we might come back out and look for some stuff that's looking like good value once again. So on that note, I am going to finish up. As always, thanks very much for your attention. Hope you found that worthwhile, and until next time, bye for now.